No issue is hotter right now than Republican tax reform. Between competing House and Senate versions of legislation, the country is set for the most thoroughgoing and consequential changes in taxes since the late 1980s. To get a sense of the good, the bad, and the ugly of tax reform, I'm sitting down with Grover Norquist, the longtime leader of Americans for Tax Reform and arguably the most influential activist on the issue over the past 30 years, especially when it comes to lowering taxes. Grover Norquist, thanks for talking with Reason.
Nick, good to be with you.
Okay, so when the Senate passed its version of tax reform, you wrote, "This is big, a bigger deal than Obamacare. Big job creation, big middle-class tax cuts, big changes in an outdated tax code." What do you like about tax reform as it's shaping up generally? What are the large contours?
There are things that happen immediately, and then there's secondary effects. We eliminate the tax deductibility of state and local taxes. Mm-hmm. Okay, it's a pay for. Rates go down, broaden the base.
And that's in both the House and the Senate.
It's in the House and the Senate. They're the same. $10,000, you can deduct up to $10,000 of property tax at the state and local level, but not income taxes.
Right.
They go, okay, that's lower rates, broaden the base, so who cares? What you just did was dramatically remove an incentive for higher taxes at the state and local level. And so this reform package is going to result in 1,000 tax increases that didn't happen at the state and local level, and 1,000 tax cuts that do. As California, with a 13.3% top income tax rate, it's going to have to take that down.
But now California is also a net donor to the federal government. So is this going to kill the golden goose if, California is a high tax state, but, and people are wealthy there. They kick a lot of money into the federal government. Shouldn't they be getting tax relief from the federal government?
No.
Okay.
Because it is California senators and congressmen, and New York senators and congressmen, New Jersey senators and congressmen, and Connecticut senators and congressmen who vote for the very high tax rates at the federal level, which is why those states are donor states. They also have politicians at the state and local level who have high taxes as well. They damage the country when they raise our personal income taxes for everyone in the country. But they also damage the whole country when their state politicians have high state taxes that are subsidized by being tax deductible by at the federal level.
What are the other tax expenditures or tax breaks that get lost here that you're good about? The Senate version doesn't do anything with the mortgage interest deduction, so it allows homeowners and the people who take the mortgage interest deduction, overwhelmingly wealthy, they can deduct up to $1 million or interest on loans up to $1 million for two houses. The House version caps that at $500,000 for one. Which is better, and why shouldn't it be zero for this?
Well, I think we should take it to zero. Some of these things are how far can you get. Any 3 senators could kill the whole project. So there are limits to how far you can go. And any 25 congressmen can kill the whole project. So when you begin to push around the edges, and we called it pretty close in both cases, we had 2 votes to spare in the Senate, and maybe 10, 15 votes to spare in the House, and now we're going to do this again. So given the rules we were living under, the Senate rules, the Byrd law, and the fact that we have narrow majorities, this is a very good piece of legislation. But that's a caveat. It's not what you and I would write if we'd written it down. It's not what I'd like to see in 20 years or 10 years.
Talk about the corporate side of this, because in a lot of ways, the corporate stuff is permanent, or, no tax decrease or tax increase is ever permanent, really. But what excites you about the corporate side of this?
Okay. This is the driver of economic growth. The other, reducing taxes on individuals, is a question of justice. You earned it, you keep more of it. But the rates that we have, the 35% business tax rate for corporations, used to be one of the lowest in the industrialized world. Now we're the highest in the industrialized world. The whole rest of the world was up in the 40s, and now they're down in the very low 20s. We're going to go from 35, completely non-competitive. Socialist China's at 25. We're at 35, and we think that there's a difference between us and them. There is. We're stupider. Okay, so our 35 goes to 20. Now, they may bounce around to 2021 as they do final negotiations, but basically 35 to 20. We're going to be competitive with the rest of the world. I really like Donald Trump's idea of going to 15. And I believe that and I can assure you that as soon as this bill passes, I will begin whining that 20 is not as good as 15.
There's also the shift from a from a global tax system to a territorial one. Explain what that is and why that's significant.
That's the second big deal. The first big deal is that investment income from around the world will flow to the United States at a 20% rate that won't at 35. Companies will move to the United States at a 20% rate. When they were moving out, some 1,700 companies left, got bought, moved, inverted.
And this, the paradigmatic case or a newsworthy case from a couple of years ago was when Burger King was bought, an American company that was originally based in Miami was bought by Tim Hortons, another fast food restaurant based in Canada. So they could get away.
How embarrassing, okay, to lose one to Canada. That's the one to the north. So one of the challenges that we have is the high rates. That's going to 20, big deal. The other is going to a territorial tax system. Most of the world's territorial, almost everybody has a territorial tax system. In France, France taxes French people and French businesses in France. If you set up a French business in the United States, or a French person goes over here and runs a rock and roll band, the United States tax them, and when they want to take their lovely money back to France, France says, nice to have you and your lovely money here. No tax, no penalty. No French taxes on money you earned overseas as a person or a business. We fix that problem for American companies overseas. And we say, when you earn money in France or Britain, they'll steal some of it, but you bring it back and it's yours. We're not going to touch it again.
So is this going to resolve, we hear a lot of stories about places like Apple in particular, having a lot of profits that are parked offshore. Now they can come back without either paying competitive tax rates or no tax on stuff that's already been taxed.
Yes, there is somewhere between $3 and $5 trillion of American earnings overseas. 3 is what most economists at least say that they believe is out there. 5 is the number Trump likes. He may be right because we don't know. We're not sure. But 3 to 5.
But he does have a known documented penchant for exaggerating things.
This is true.
From the size of his hands to the size of his crowd. So
okay.
We'll probably go with 3.
Somewhere between 3 and 5. But that's a lot of money to come back to the United States pretty quickly.
Then both bills or both versions also take some action against the individual mandate for Obamacare. Does that matter in this at all? And I guess it's the Senate bill gets rid of it and the House bill reduces the penalty to 0 or something like that?
Yes, but the House has also agreed that they're going to take the Senate approach.
So why is that important in terms of tax reform, or is that just kind of an extra, it's a cherry on top?
Both. It's a very large cherry. It's a huge cherry. It is as big as any of the other things that we're doing, getting rid of that tax. One, it's a tax. It is a tax on you if you refuse to buy Obamacare or insurance, and it's $700 for an individual, but goes up, and it's $2,000, $2,400 for a family of 4. It is a big number. 3 million people get hit by it. 80% of them earn less than $50,000 a year. So this is a tax on low-income people that the Washington Post loves. Okay, all the left of center structures, newspapers, magazines, pundits who like to say that this is a bill to help rich people, they most want to keep the tax on low-income people who don't want to buy Obamacare.
One of the most controversial or most talked about, because it seems kind of like, it's not going to raise much money, but it does inconvenience a lot of people. There is discussion that in the House version that things such as graduate student tuition, scholarships, if you went to graduate school and you get a TA-ship and you get free tuition, which costs, say, $35,000 a year, you're going to be paying tax on that as compensation. Which makes going to graduate school much more expensive. Is that a good thing or a bad thing?
It's an interesting question. What they're trying to do is even out, because if you were to do this in any other business, that would be taxable income.
Right. Unless it's healthcare.
Yes, and frankly, we're trying to cull those down and bring down rates. This is one that sticks out. We have particularly vocal people who benefit from it. I mean, there's an easy thing to do. Don't pretend to charge. Don't charge them for the education and don't pay them for the other. You can do both. And the establishment has written themselves lots of benefits in tax law over the last 60 years. This is one of them. Okay? The tax deductibility of state and local taxes advantages public sector unions who say, go raise the money. It's easier to do because it's tax deductible. It's like giving to charity. It's tax deductible.
Which should be zeroed out.
I believe so. Yeah. Now, you take these things step at a time. You don't want to get too far ahead of where the country is to understand it. A lot of people feel if you didn't have tax deductibility for charity, there wouldn't be any. I don't think that's correct. I think if you look at the history, charity goes up and down with people's incomes, not with tax rates or some of these laws or tax deductibility. But I understand the fear that people have on that. So let's take this stuff down a step at a time, as rapidly as you can, and move towards where the government doesn't advantage any behavior or disadvantage any behavior. It just steals what it needs to run some of the government.
Do you feel compared to, I mean, Americans for Tax Reform, you created that in 1985.
Yeah.
So it was a little bit before the last big tax, truly comprehensive tax reform.
It was set up by the Reagan White House to do the 86 bill, and they asked me to run it.
So I was only coming into my kind of political consciousness, and I'm not sure that I've fully gotten there yet, but it seemed like there was much more of a national conversation about what was the goal of tax policy, what were the effects of tax policy, that, it was bipartisan. Bill Bradley, the New Jersey Democratic senator, was heavily involved in it. There doesn't seem to have been any kind of discussion like that. Here it's mostly like a grab bag of, okay, we can get this done, and this done, and we need a big win, we meaning the Republicans. Do you feel like there isn't a consensus or a clearly articulated rationale for what's being put forward as tax reform?
There's a complete consensus on why we're doing this within the Republican Party, okay? This is the same process as 86, without the Democrats invited to the party. And that's not exactly correct. The Democrats have invited themselves out of the party. When we started this process, all but 5 of the 48 Democrats wrote a letter saying, to hell with you, we're going to have nothing to do with anything that's a tax cut. Okay, we're doing a tax cut. So, goodbye. And so they decided they weren't going to be in on the process. 86 was unique and not something that can be replicated for a number of reasons. First was in 81, Reagan came and cut marginal tax rates all across the board. The country was in a recognized recession. It was hard to argue it wasn't the continuation of all of Jimmy Carter's stuff. We cut taxes. The economy,
like deregulation.
Well,
Come on, let's not piss on Jimmy Carter completely. He was not such a bad guy.
No, on deregulation, he and Kahn and a couple of his appointees were very, very good. And they don't advertise that they took a lead on that.
Sure.
If you ask them, what'd you do when you're president, he doesn't list that as one of the things. But it's true that Kahn helped got that ball rolling with FTC and so on. And then Reagan got the legislation moved as well to make it permanent. Dramatically changed things. I think Reagan's economic growth was half deregulation, half tax cuts. But the press can only focus on tax cuts. They don't understand deregulation. It's 1,000 million different decisions in different places, and you can't put it on TV. But you can do guy signs bill on TV, and they can understand that. 81, we cut taxes. Teddy Kennedy said it would create inflation. Inflation went down to almost nothing, and to give us a recession or a depression.
There were also tax increases after that, before 86.
There were, but these were deductions and credits. The rates just kept coming down. So the Democrats were so wrong on the rates and the fact that you would actually get growth and more revenue, even, out of lowering the rates. So by 86, they said, we don't want to be on the wrong side of the tax issue. 2, we know if we cut the rates, we're not going to lose any money. And we want to get all that lovely money from getting rid of deductions and credits. Republicans said, someday the Democrats will be in power. They'll take away all those deductions and credits, and they'll leave the rates where they are. So let's trade the rates for those deductions and credits before the Democrats can just take it all, okay? So each team, for their own reasons, was willing to go to a revenue neutral, rates down, eliminate deductions and credits, revenue neutral. Led to all sorts of bad things on growth because some of the deductions and credits they got rid of were part of the pro-growth agenda. Long depreciation schedules instead of going to full business expensing immediately. But it was progress because it simplified the code and it did give you the lower rates. But then you had stalemate for the rest of that period. This time around, the Democrats say they want lower marginal rates on businesses. But for 8 years of the Obama administration, they never wrote a bill, they never did it.
But here, in the 90s, then you had Bill Clinton coming in and he raised the top marginal income tax rate. Yes. And a lot of people predicted, okay, that's the end of the, Reagan expansion. That wasn't true. Towards the end of the 90s, towards the end of Bill Clinton's years, he cut capital gains rates substantially. Or, and I mean, all of this stuff is a political process. And that worked out extremely well. So why wouldn't the Democrats come around at all this time? I mean, how much of this is just a way of talking about polarized politics that it doesn't have anything to do with the issues? It's just we're in a particularly tribal period now.
Well, one, it's tribal, but it's more than that. It's tribal, but by belief. And when Obama was asked, why wouldn't you cut the capital gains tax? You know you raise revenue if you cut the capital gains tax, and you could help poor people with that lovely money. And he said that he would rather leave the capital gains tax up, even though it hurt lower income people, even though it got the government less money. There is a recent poll that said 1 out of 6 people would like to raise taxes on rich people, even if they thought it would hurt the poorest people. So 1 out of 6 people in the United States is the caricature of the left, which is they hate rich people so much they don't mind poor people suffering.
But now, in terms of total revenue, which ultimately is what we're talking about here. Taxes are not the price we pay for civilization; they're the taxes we pay for government.
Yes,
we've been pulling in for most of the 21st century. It's gone up and down a little bit, particularly during the recession, but about 17% of GDP, regardless of what the actual tax code says. Why does it matter? Do you and Grover Norquist, who likes lower taxes, do you want the government to be taking a bigger bite of GDP as taxes? So
no,
then what is this going to lead to, are we going to stay at 17% of GDP, but we're going to have a bigger economy so we have more money to play with? Or
my target is that government spending as a percentage of the whole economy, as a percentage of GDP, should be as low as possible. Right. Okay, and you can drive that down in one of 2 ways. You can either grow the economy and leave the same stupid government the same size, but it becomes just a smaller problem if you've grown the economy twice as big. Government's half as big as the rest of us. Now we can jump it when they're not looking. But the other part of that is you could shrink the size. You could have the same size of the economy, nothing gets any better, but the government shrinks. Well, that's better too. So I want both. And that's what this bill gets to. More growth and, over time, less spending.
How does it get at all to less spending, though? And this is, what I want to get real about here is, and probably your most famous quote is that you want to shrink the size of government small enough where you can drown it in a bathtub, or some such.
Yeah.
What are the Republicans doing? And this, I think, is, from a libertarian perspective, I remember very clearly the Bush years, where Bush was a small government conservative who somehow, between entering office and leaving, had grown real federal spending, inflation-adjusted terms, by 50%, had refused to pay for wars with war taxes, which is a traditional thing that presidents would do or call for. Every time the Republican Party, at least in the 21st century, has been in power, they have tried to cut taxes, sometimes successfully, sometimes not. Bush certainly did cut taxes a bit, and then they just blow out spending. And the Republican Party is, if you look at the House plan, if you look at, Donald Trump's budget plan, if you look at when the Senate kind of gets around to talking about this, they want to go from spending about $4 trillion now to $5 trillion in 10 years. Where are the spending cuts? Donald Trump has pledged never to touch Medicaid or Social Security.
No. You just you put your finger on the answer to the previous question, but you needed to listen more carefully to Donald Trump, which is not always what I'd advise somebody to do. But in this case, Trump has said during the campaign, we're not going to touch Social Security. A pretty easy promise to make since it takes 60 votes by law to do anything. We don't have 60 votes. 2, that he wouldn't touch Medicare, which I think is a mistake, but I understand the argument. I don't need this headache. I don't need somebody being able to suggest.
Between Medicare and Social Security, that's an increasing percentage of government spending.
But here's what's on the table, and here's what happens in April of this year. Okay, not in some far off time. April of this year, we're going to do tax cuts. That's the reconciliation package this year, passed in December of 2017. April 2018, we're going to do welfare reform. Well, welfare, TANF, is a very small number. We're going to add food stamps, a very small number. Well, 75 billion or so. It's not too small. And we're going to add in Medicaid, which is a quarter of all state and local budgets. And take those together, and probably also what's left of Obamacare in terms of spending, and block grant those to the states and limit their growth to below the way it's growing now, okay? So that you go out 10 years or whatever. I asked Peter Farrar what the numbers are, and He says in a matter of 20 years, it's trillions of dollars that you get just from taking the rate and bring it down a little bit.
By the same token, Medicare and Social Security spending are going to go up. They're already effectively running deficits, so we're going to need more taxes if we don't change their benefit plans.
How do you eat an elephant? One bite at a time.
Okay, well, and so...
But if you do this and make it work, and I believe you can, we did it with welfare reform with Clinton. This is what we're going to shove down the Democrats' throat.
But it was also George Bush who helped expand, food stamps, disability, et cetera. Who expanded Medicare.
Okay.
Who did No Child Left Behind.
But Trump actually is president of the United States.
Right.
George Bush spent 6 years being the mayor of Baghdad, and he couldn't be bothered being president of the United States. So
what did Trump do to change spending from, in his first budget to his second budget? He's not cutting spending.
No,
he will say, "Oh, I'm getting rid of, I'm cutting this small agency here," but he's not touching it.
The budget was pretty good. You can't get it through the House and Senate. His budget was better than the House and Senate. Because the way you reduce the size of government in the United States and a republic is you reform government down. You don't chop it 10%. You reform it down, you change the rules, you block it out to 50 states, and then some states do it really well and some states do it really poorly, and everyone says, let's do more of that. And the country shifts that way, and spending actually came down rather dramatically on the welfare, aid to families with dependent children, TANF. They focused on people who needed it, and states will police fraud. Because once you give them the money,
but so then when does Medicare and Social Security and defense spending, which are the three biggest, items, when are those going to come under review?
I believe that once we can go to the American people and convince them that this was done properly, that you can look at Medicare and take the project, which was a bipartisan project not just too long ago, that Paul Ryan and Democrats came up with. Now, Democrats all ran from it as soon as they thought somebody would actually pass it. But we do need to you can either keep prices down through price controls or through competition. And they try and do it through competition rather than price controls, which is wiser.
The Senate Joint Tax Committee has said that their scoring of tax reform, or the Senate plan, is that it will increase national debt, which is already, depending on whether you talk about intragovernmental, like the total national debt or just the debt owned by the public, but it's already at historic highs. And at the total national debt is over 100% of the economy. They say that the Senate plan will increase debt by $1 trillion. If you include economic growth, $1.6 trillion without scoring it that way. Right. Do you think that's wrong, or that doesn't matter, or?
Two things. I think it's a ridiculous number. If you grow at 3% a year instead of 2% a year, and a year ago we were told you couldn't grow at 3% anymore because the new normal was 2%, the same Club for Growth, limits to growth argument that was made to justify 4 years of Carter's failure is now used to justify 8 years of Obama's failure. You can't grow any faster than that anymore. There's nothing wrong with our policies.
It's also a lot of conservative. When the Republicans, is mounting debt a problem? Because there are no projections really that show national debt as a percentage of GDP or spending is going to be going down anytime soon. Republicans spent a lot of time when Obama was in office saying, mounting national debt is a bad thing. It's a drag on the economy. And they were actually aping what Democrats were saying under George Bush. Obama himself in 2008, when he was running for president, said, we got to get the debt under control. Right. I mean, isn't this all just kind of like kabuki BS theater of like when you're in power, you say national debt's a bad thing, or when you're out of power, it's a bad thing. When you're in power, you run it up because everybody likes it. And if taxes are the price we pay for government, shouldn't we insist as, from a fiscal reality, we should be paying full freight for government in every year?
No. But the challenge we have is that both parties use the word deficit and neither mean it. Democrats say, we're worried about the deficit, we should raise taxes. And Republicans say, we're worried about the deficit, we should cut spending. So the public hears, and Ross Perot
But then we never do anything. We do cut taxes and we do increase spending. I mean, if you, on a personal level, this is like government by Groupon, if you can get $1 worth of spending for 75 cents, you're going to probably want more spending. If we were spending $1, if we were actually fully expensing the cost of government, wouldn't the demand go down? Ceteris paribus?
I fear not, because one of the things government does is very well, they hide the tax. Corporations will pay the tax. They put the tax into products. They put the tax into regulations instead of taxes. It doesn't even show up on the books then. Government's very good at hiding its true costs for just the reason you said. If people understood how much government costs, they wouldn't want as much.
Right.
But the government gets to play at this game too, and they get to hide how they impose costs on the American people. But we need to take taxes down to get growth. We need to take taxes down because it's your money and it belongs to you. The idea that somebody was running on saying we're giving all this money to people. It's the idea that if the government fails to take your income, they've somehow given it to you. That when you pass a mugger on the street, he gave you your wallet. Oh, he gave me a wallet. No, he didn't. He forgot to steal it. He didn't give it to you.
Well, it is, but it's also wrong. I mean, for the government to say, if you own a house and you make enough money where it makes sense to itemize your tax deduction, we're going to give you some money back that we're not going to give to a renter. Isn't that wrong? I mean, that's unfair.
Taxing is taking money from people who earned it and giving it to people who didn't necessarily earn it. So fairness is an odd concept in dealing with taxes. There's destructive taxes, there's equal taxes, there's less destructive taxes. Fairness has always struck me as the wrong word to think about with taxes.
Quick final question: when will the tax reform be signed by Donald Trump, and will you be happy with the results?
I will be happy because this is a huge step in the right direction. I will then immediately begin to whine that we've got further to go and start in on next year, which is the entitlement reform and literally trillions of dollars in reduction. We'll cut more than $9 trillion over the next 20, 30 years, wiping out all the buildup under Obama, because unfunded liability is debt. So when we need to get rid of the unfunded liabilities of Medicaid, Social Security. That is as much debt as banked debt. That's just debt that hasn't arrived yet. It's coming unless you change what you're doing.
So will tax reform be home for Christmas?
Tax reform will be here for Christmas. It will give you significantly more growth than we have. If you grow at 3% a year for a decade instead of 2% a year for a decade, the government nets $2.5 trillion. You can buy a lot of tax cuts for that.
All right, we'll leave it there. We've been talking with Grover Norquist. He's the founder and president of Americans for Tax Reform. Grover, thanks for talking to Reason.
Thank you, Nick.